Shanghai upgrade is complete. Devs are singing. They're singing the song called Chapella, and this is going to be a real test of market strength for crypto. Usually, when these events happen, it's not really it's not really bullish the day after. But
yeah, we got a bunch
either
of
way,
headwinds. Like we have, we got through CPI, but there's also all the conferences too. But I mean, at this point, dude, it's like I still think people like are not believing that that the bid is real, and so I think that because if you look, like the BTC bid is like almost all spot, and so I mean it's like what more do you need to see? It's just kind of like that's kind of my thought process, and and yeah, like I think CPI was came in good today. That helps. I think if we can get through the next couple of weeks, just through like the conferences and just some shit like that, I think we'll be all right. But I do think that we'll probably hit like 32K and then just like have like a slow grind upward and like just chop people up till like till May or so.
Well, that's barring some forced selling, but you bring up a good point with regard to price action. If price action is driven by spot and there's not excessive open interest to upside or downside, you're not going to have necessarily a cascade in one direction or another. I would put that that would allow me to say this market is in a relatively healthy position. And it would be interesting to see during some sort of credit event outperforming depreciation or outperformance in Bitcoin relative to U.S. equity indices, where equity indices are depreciating to a greater extent than the large cap crypto, Ethereum and Bitcoin.
That's kind of my thoughts too. Is like, even if we were to see a big capitulation event where there were a sell-off in crypto, I would see it as being not nowhere near as significant as what I would see in the indices. I think the indices are looking at significantly more sell-off than what crypto would see overall, as far as the way that buying is looking and strength is looking in crypto to indices.
It would be very interesting for a coincidence of events where a credit event plays out with significant forced selling in equity markets, but macroeconomic conditions, intra-market pressures push DXY, or at least the dollar versus other Forex pairs, down significantly, as the DXY, giving you a broad perspective of currency pairings, as the dollar relatively depreciates, it increases the purchasing power of foreign currencies. So that could be a tailwind for crypto markets, and potentially, speculatively, I could see crypto markets appreciating under a variety of circumstances, not from domestic U.S. deployment of capital, but international deployment.
Yeah, I think wasn't China doing some QE and something like that, and the French stock market hit an all-time high. The DAX is about to hit an all-time high. Tech looks so strong, dude. You put QQQ, and just as a reminder, I don't trade stocks, but I know how to read a chart pretty clearly. But if you look at QQQ over the last 2 quarters, dude, you're having higher highs and higher lows. The bitch is up over 20% in the last 6 months, dude. So literally all QQQ, man, has to do is just range in a 5% in a 5% like range, and dude, by Q3, like we're pretty much bullish, man. And you're talking like year to date, you can finish off QQQ at like 7% year to date. That's bullish, man. Most people forget, man, that like when it comes to your average returns in financial markets, man, 5 to 7% is the ceiling for the average person. So it's like I kind of feel like people are expecting like the COVID cycle type of returns. Like, oh, dude, I'm up 30-40% just from holding an indice. It's like maybe we just return to the norm, as far as like equities go, and then crypto just rages on. I think Stanley Druckenmiller said something along the lines of like, what if equities just go sideways in a range,
Mm.
and then crypto just like absolutely rips? And we're seeing that, man, especially like in the Ethereum ecosystem, man. Like, there's this one project called Unsheathed. The ticker's Oosh. Shout out to DT here in the crowd, and also Adrian for pointing that out to me. And we'll actually be hosting them on a space next weekend, I believe on Friday. The following day we have Monad, a pretty cool like layer one. So I think we're gonna have like Ethereum sort of be like what Amazon was post.com crash, where it just rallied like 200% off the bottom. So you're talking Ethereum going to like 2,400 by the end of the year, which I think is completely possible. And like the volume is pretty strong and all that stuff. And really, it's like this whole year has been like chop upwards, right? It's a bit of chop, a god candle, a bit of chop, a god candle. And like again, like I've been saying since November, there hasn't even been like a mass exodus from DeFi, and if there was going to be a mass exodus, it would have been when USDC depegged. So I fail to see the bearish case for crypto outside of like some black swans and golly, bro, you had USDC putting in hourly candles below 95 cents. I think people forget just how terrifying that was, bro. Like for the first time ever, I'm like,
Yeah.
shit, dude, I need to buy some fucking Bitcoin. But about like 2 weeks later, I'm like, fuck it, man. I'm just gonna go ahead and go back to Arbitrum and go in the trenches. So I got some AI coin about 2 weeks ago. 2 weeks ago, called zero XO, and I have
Dude,
no
you were
idea
in
what it
that?
does.
Mhm.
Yeah,
Dude, that
dude,
shit
from
rips so
fucking
hard.
yeah. Like all I knew is that like it deals with some privacy and some AI bullshit, and I'm like, all right, man, I'm gonna left curve this thing. I'm not gonna give my huge thesis and why I'm gonna ape. It looks cool, like the UI looks cool. It sounds cool, so I'm gonna put in 2 or 3 ETH in this thing, and it just fucking rips. Same thing with Aura. I've been DCing into Aura since January, and I don't regret it at all, dude. And when you have people from like Avax and Solana talk about Aura and how like insane it is and all that shit, it's like, okay, cool. If people that are smarter than me and are in the trenches more than me are bullish on this thing, I'm gonna fucking do it. I'm not gonna pay attention to some like doomer that's talking about the end of the world. I'm just not, man. That's that's why usually like new cycle participants, they always outperform the guys that have been here for a while, because if it
Well
looks
said.
cool, if it sounds cool, if it's fun, most of all if it's fun. I see Hash in the crowd. What's going on,
What's
bro?
up, Ash?
And Hash says something along the lines of like, we're just here to have fun and trade some tokens with each other. And some of the best use cases for this is when number goes up, it goes up hard, and the tech looks good after that, right? So yeah, that's sort of like my rant, dude. I'm so bullish. I still think we're gonna hit like 35, 40K, 45K. And the most extreme events probably 50K, like 2019, where like people think we're gonna hit all time high and then we just go back to the range or whatever. But bro, I'm not a technical guy. I'm a bull market hero. When shit looks easy and things are looking fun, I go in. And to me, fun season started when I was sidelined with Bonk. Like fucking R89 showed me Bonk when it
Dude, that was
was
Max
like at a
Paint.
3 million. Yeah, I saw that thing run from like
Yeah, it
three
did like
mil.
1,000x, bro.
Uh, yeah. I saw it run from like 3 mil to 50 mil. I'm like, holy shit, I missed the boat on this. But let me at least get Solana, right? Like it's $9. Vitalik tweeted about it. Like, let me see what's up, right? And when I saw that thing hit 100 million in market cap, I'm like, okay, cool. fun season is back. Let me start going to the casino again, and that's when Payne told me about Rollbit at like half a penny, and people were giving all these narratives about, oh, where's the liquidity going to come from? Oh, where are the buyers? This and that, unemployment, yada yada, and it's like, listen, man, listen. If commodities are in a macro downtrend, which I believe they are, dude, the oil chart looks absolutely horrific. And same thing with wheat. And the only reason why those things went up was because, quite frankly, it was an anomaly what happened last year. You had black swan after black swan after black swan. I don't care what people say, dude. Last year, you had 3AC, you had Luna, you had this war and all that stuff. And that's the reason why all these things chatted up and crypto got destroyed. But, when you have some good news, man, bro, just go back and think to yourself, when things look cheap, you buy. When you start going outside of your field and when you start talking about some weird ass correlation from the 70s or the 50s, I think that's when you get cucked. That's when you get cucked and you go out of your own lane, dude. Like if you're a shitcoiner, bro, if you do good on deck screener alts, then do that, right? Like you shouldn't be going to like freaking Cardano NFTs and just get cooked after that, man. I think
You want to know?
just
Have you heard the craziest news though, Wabi?
the craziest news, bro, is that okay? If oh my gosh, if
Tell me if
PPI
you heard it. Tell me. No, it's today. It came out today. Tell me if you heard the craziest news.
the craziest news would be that it's very shocking and sus that prices are not 20% higher.
No.
And what's the news, bro?
The craziest news that happened at the lows. Do you want to know? You want to know the craziest news?
What happened?
Hold on, what happened, brother? Dow,
All
I
right.
sent you an invite to speak. Dow Chemist, I sent you an invite to speak.
FTX failed at the lows, right?
Oh yeah.
Oh yeah,
So
yeah.
FTX captured $7 billion of the dollars that were missing. They're talking about reopening FTX platform now.
That's a
I
joke.
think that would take us to like 45.
5 flex.
Period. But I am telling you,
Yeah,
as
Flex
crazy
is,
as that sounds, that is the most bullish thing I've heard, period, in a while. And I know that sounds crazy, but I can't think of anything more bullish than that. The flip.
No, I don't think that's crazy at all. I think that's pretty bullish, and and like the exchange they're trying to build is like I think it's actually a good idea too, because I mean they're essentially just trying to get people's money back who got fucked. I think it's it has good intentions, and it's a pretty good idea. I think also it's like if you consider like, so that's $7 billion, right? Like the exchange token Flex is like 200 mil or something. So I mean, and like their volume has been steadily increasing. Suzu's been tweeting about it and stuff. So if they pull this off, I mean, that's gonna be fucking awesome for the space.
they raised money and they got their cap filled in a month, dude. Like it's actually shocking that they didn't want to raise a valuation than a lot of these layer ones that are raising like upwards of $1 billion and $5 billion, trying to be like EOS 2.0. And like I think all OpenX raised was like 25 million, and they don't even have their market making program up yet. So it's pretty much just people trying to test it out. And like, I mean, dude, the first day of volume, I think it was only like $2, and now they're in the six figures. And it's sort of like, dude, if you really think about it, man, like imagine if there were just no market makers in any markets. I think people will be terrified at the daily volume, simply because, like, bro, most of the people in any markets, man, they just buy and hold, man. The moment you try to like, try to be some super quant, you get death by 1,000 slashes.
Oh, the market makers actually changed the entire game. It's quite extraordinary. It's a guaranteed buyer and a guaranteed seller at spot. And that's quite extraordinary for decreasing the volatility historically. Not that we have much history in Ethereum as a market. It really dates back to late 2019 with Uniswap when there was $500,000 on the exchange. But liquidity is everything. And there's still $131.72 billion worth of liquidity across the largest of chains. And that is a lot of capital. There's a lot of currency units that we could fight after.
I think a great point, too, is that if you look at who staked ETH for the past 30 months and had their ETH unlocked, like, these are long-term ETH bulls. These aren't people that are looking to sell. So I think a lot of that liquidity is going to flow back into native ETH assets, NFTs, like blue chip ETH NFTs. I think we'll see like another NFT season probably this summer.
For the liquidity, anything that gets unlocked, I would say the destination is probably LSDs.
I was gonna say, sorry to cut you off. I'm so bullish on LSDs. I ranted to Wabi about this for like 3 hours last night. Like, I don't think people really understand like how lucrative this is gonna be, and like this will be the biggest narrative of the next cycle, I think, for ETH. Because I mean, you're telling people that, yeah, you can use this like if people adopt these liquid staking derivatives as basically universal collateral, right? It's like, okay, yeah, you can take this and then you can earn like whatever, like 4 or 5% on it. Like, earning yield on your collateral is a crazy concept. And like I think that people are not like understanding like how much that's going to change things for just the space as a whole. Like that's truly one of the biggest innovations like that we've had since smart contracts, I think. Like,
there's one thing that's so desperately needed that I've like IPOR's touched on it, but it's not really where it needs to be, is interest rate swaps, because there's one product in particular, SFRX ETH, with the outperforming LSD yield rate, and if you could hedge that interest rate, you're able to borrow with a relatively risk or minimized risk profile. So if you get 12% and you're able to take 4 or 5% to hedge the interest rate variation, just in case there's excess demand on that collateral, then you're able to take out more credit, create more currency units than you would if you didn't have that kind of hedge. We're not there yet, but I still think people are going to plow their collateral into these types of currency creation CDPs. A lot of stuff has been built over the last couple of years that I don't think is going to go away. Even stuff like Abracadabra, all the drama, the concept is quite meaningful, and all of it contributes significantly to the internal liquidity structure of this market. And if you go on like DeFi Llama, which has such tremendous information in the stable coins, and you can break it down between CDPs, or not really loans like money markets and Aave, but there's a big distinction between USDC, USDT, and stuff like Frax or MIM, and stuff where there's a synthetic currency unit manifested from DeFi native collateral. So it's just quite an interesting mixture of currency that we're able to fight over. That's just the most important thing I like to remind folks as you see bullishness emerge in markets for whatever reason. It doesn't matter what reason, but the most important thing is the game is scored in dollars, and if you're able to capitalize and acquire and capture some excess currency, that's how you win, and all you need is 51%.
Yeah, I think there's some case for that to be the scenario. I think there's still some pain though from what happened at the end of the last bull cycle, where a lot of people did go in for yield and ended up in these yield cycles, ended up getting burned on a lot of these situations too, whether it be Celsius and a lot of these other places where they reached for yield and ended up getting kind of screwed by the courts, and basically they said not your keys, not your crypto.
Well, skip over the centralized exchanges. Just take WBTC and you go in Aave, you have $1 million WBTC and you borrow $250,000 worth of USDC. So you got your Bitcoin, you got your collateral that's moving around relative to the price point of Bitcoin, and now you have $250,000 that you could go speculate on GMX. So you have working capital that you've accessed, equity access of a relatively large BTC position. And that frees up, increases the amount of circulating liquidity in the system. And that's not even exogenous. That's not even new capital coming in. That's just the systems that have been created over the last couple of years that allow fresh currency to be created from within the system itself. This has all wonderful overtones of historic precedents from traditional finance.
That's essentially what Celsius was. Celsius was allowing you to stake whatever you had, and then you could take out a loan against whatever currency that you basically had, and then you could pay back that loan essentially, right?
Sure, but you have hypothecation. But we're talking Aave and stuff, and MIM, and things that have shown DeFi resilience in the contract implementation.
Yeah. I mean, as long as they're not hacked or anything like that, of course. I think that in those scenarios, for sure.
If anything survives USDC and UST meltdowns, I think there's some incredible tried and tested protocols thus far. Talk about stress test.
I think the big difference there is when you look at Celsius, most people didn't know or didn't care where the yield was coming from. And in the case of LSD, you have a clear, transparent route. Like you know that this is coming from validators. There's a way to know actually like what's the governance around Lido, Rocket Pool, or what have you, or if they're using extra yield from MEV. So you have a really on-chain transparency as to where the yield is coming from. So in my opinion, that's a way more sustainable model than, to your point, the previous cycle, people were getting yield, but the yield, they didn't know where it came from. And the issue that we still have is this variable. So just to throw it back at you guys and maybe the captain is, you mentioned IPR, and I think it's in the desire to get like a fixed rate, right? You get your variable rate from your stake ETH, but you'd want to have a more fixed rate, right? Like if you're a large institution, you maybe don't want to gamble. Have you looked at Pendle, who does something along those lines where they separate the yield-bearing asset into a nominal, a principal token, and then yield token? And you can actually think of that principal token as a fixed rate because like it will mature over time. So you can kind of have a default fixed rate on that asset.
These are the types of structured products that make a new market. Now, who's really comfortable though with a risk-adjusted 5% on the money, on 7% on an LSD? Whatever Frax is at, I think it's probably at like 10, 11, 12% right about now. But even 10, 11, 12%, it's quite a stark reality on how little return it is over a yearly basis. I mean, if you have $1 million, great, you make 120 grand. But with a smaller position, most folks are not sitting in that type of yield for long durations of time. So I don't necessarily see that as what's going to be a tremendous amount of activity in the short term. But I do see leverage, which is just accessing equity and taking 20 grand worth of Ethereum and borrowing 5 grand worth of USDC to speculate. And that as a whole of a market could create some significant volume and allow velocity to exist in what is really a negative sum environment for all of 22, and it still continues. This two and change $2 billion over the last couple of weeks have still been withdrawn and cycled between USDC and USDT. It's quite extraordinary looking over the stablecoin profiles as they've changed over the last couple of weeks.
It sounds like you're trying to take the United States model and create it inside the crypto space.
Oh, they've done a good part of that. A lot of the systems are wonderfully analogous to traditional finance, including Eurodollar regimes, which is basically a CDP, money markets, forex markets, debt markets, all the derivatives, the synthetic exchanges, structured products. They built all of that. That's why do you think Arthur Hayes is all up in GMX? He loves that type of stuff.
Yeah, I think if we can get some kind of like, and I don't know how it would be created or how it would be structured, but some kind of insurance-backed scenarios that could really kind of back some of these chains, I think that would really create confidence in the market as a whole, as far as allowing lending to be more fluid and be more robust as a whole. I think that's the one thing we're lacking in the space, I think.
Well, trust and risk, bear in mind, are wonderful topics. The L2s are playgrounds. The only folks playing on the L2s are us, and it's a very small population. It's something, if you look at the total number of DeFi users, it's a remarkably small number. It's not millions. It's in the thousands. I saw numbers thrown around. I can't recall them specifically, but I wouldn't be surprised if it's like 100,000 on a rolling basis. So it's a small minority of actors engaging on the L2s, and it's a relatively small amount of capital. The most exciting thus far has been Arbitrum, which is still above $2 billion worth of liquidity. But just food for thought, it's 35 times smaller than Ethereum mainnet, or mainnet is 35 times larger than the total liquidity on Arbitrum, and everything else it just dwarfs. Optimism is less, $600 million. Avalanche is small as well. So really the most incredible opportunity is where the most liquidity is, albeit you can have significant outperformance on the L2s, and then you retreat back to capital safety and the finality of Ethereum mainnet, which is something we see significantly in the capital outflows of the L2s. If you look on the stablecoin pages of DeFi Llama, you'll see the drawdowns. $21 million withdrawn from Arbitrum yesterday, 8.41 the day before, 20 the day before. These are all the big boys just taking their capital back to safety.
Yeah, I think too. It's more of a use case. Like when you look at layer twos as a whole, it's more of a ease of use. It's not ease of use for retail when it comes to layer twos. Layer ones are just more easy. They're easier to use on a base level. Layer twos usually add an extra layer of complication to be able to utilize them with bridging and everything else, and that creates more complication to be able to get onto them and be able to operate on them, as well as more
The
costs.
smaller liquidity can be or should really be thought of as an increased risk profile for smaller portfolios. Why do I say this? It's so easy to significantly own a market if you bridge over $1 million or $2 million and you're engaging with a market cap asset of like 3, 4, 5 mil. I mean, all you have to do is buy like 50-60% of the LP, and you run it on Joe's new 2.1 which is concentrated bucket liquidity. Quite an extraordinary deployment they just did. And bam, you're pulling in 60% of all transaction volume for the entire asset. Your buy of 2 to 3 mil is going to start driving the price up. It's going to draw in the additional capital. You're going to capture all the transaction fees as the price of the asset runs up, and then you just pull liquidity and exit. It's such a complicated psychological thing to digest, how much of an advantage a relatively large amount of capital has in a smaller market setting.
The one thing I will say is, like, I think that the illusion of security is pretty bullish, like, for the liquid staking derivatives, right? Like, I think that now that you can unlock them, I don't see as much reason for the sell pressure, because, like, I don't know, like, if you just knowing that they're liquid now, I would feel more inclined to stake it, right? Because why would you, if you staked it before, and you didn't know when it was like going to be unlocked, right? That's like, there's less incentive. There's more incentive to stake it now that it's liquid, So I think that there'll probably be like net inflows in the next couple of weeks of people just like staking to run nodes.
I think that amount of liquidity flowing into Ethereum stake positions is definitely something to keep an eye on. I just expect it to continue the directionality over the next couple of years. Everyone's just, as much as we talk on the stream, and I agree, I'm not a doom and gloomer by any means, but everyone else is. So what does that mean? That means there is going to be resistance to capital moving into the system. We see the outflows, how it's a negative sum game. But what you just described is a perfect reason for the anomaly, for the decoupling. I hate that phrase, where you have underperformance in other markets, but the crypto markets are able to continue to attract capital because they're doing something different. They have a reduced risk profile now that you could unstake your Ethereum. And I think this will continue to play out over the next couple of years in a very big way, especially with the overall decrease in circulating supply of Ethereum with the burn component.
Yeah, I agree with that. I think also when you look at what's going on with MEV, right, and the eigenlayer, for example, the validators are not just going to receive the yield from providing consensus to the chain, but there's also the ability to get gains from arbitrage, right? The good MEV, not like the sandwich attack, but like the one where you actually optimize the ordering of the transactions, so the validators get the most amount of reward for their effort, and
Block
then you have
building.
exactly right. You have the block building and the searchers looking to optimize how to order those transactions into blocks. But you also have this thing called eigenlayer, which is still new, but the concept of restaking. You're a validator, and you're happy getting your yield, participating to security of the layer. But now you can actually use that same ETH for the security of a new network. It could be for Oracle, it could be for a bridge, it could be for a sequencer. And now you yield, maybe it was 5% from consensus, an extra 2-3% from MEV. You can actually get new tokens and more ETH from actually reusing your ETH. So all of a sudden, this idea of being a validator for ETH, I think it attracts way more than just retail. And to you guys' point, the fact that now you have the withdrawal available, from what I've heard, I had a space early this morning with a couple of LSD project, and they're saying they get a lot of interest from institutions, right? And I guess you can look at it from a compliance point of view. The moment that they know that the upgrade went through and that they actually have the capacity to withdraw the phone they need to, now it actually makes it a lot easier for them to invest in something like ETH, where you have price appreciation and then you have the yield on top of that. And this notion they would talk about this risk-free rate, right? So it's not to say that ETH staking is risk-free, but comparatively to the rest of the space, it's probably one of the safest way to get a yield. And if you don't denominate in USD, which obviously most traditional finance players will do, if you denominate in ETH, it's actually risk-free.
You just nailed a very important thing. It's risk-free ETH denominated. That's huge. And that is if you are needing Ethereum as income to continue financing network operations, either as a protocol or as an actor in crypto markets, you're not thinking necessarily dollar denominated, or if you are thinking dollar denominated, all you need to do is accumulate more ETH, and you're thinking with a long enough time horizon where 3-5 years from now, the ETH is going to appreciate dollar denominated, so it's speculative in that regard, but it's risk-free in Ethereum denomination, and that's how you're able to build the same type of financial structured products that traditional finance did, dollar denominated.
I
think
do want to
too,
bring up too.
like it's basically just if QQQ paid you an insane dividend, and it's like, because that's what ETH is really. It's just like an index for like everything that's being built on it. And yeah, it's like, dude, if you just pitch this to people, it's like, dude, this is basically like QQQ for crypto, but it also pays you an insane dividend, and you can use it as collateral to like, do whatever you want in the space. Like, I just think that, because in theory, like the the staking yield will pay off like a good chunk of the like whatever you use it as collateral for. And so yeah, I don't see like I don't see a timeline where this isn't just absolutely massive, within institutions and just like the space in general. Like, I think that ETH is probably going to outperform like almost everything. Like, for the most part, I mean, obviously there's going to be a bunch of alts that like, rip, but it's, if you want just like general exposure to the space, like ETH is, I think ETH will probably at least like do an 8x or something, from here, like at the peak of top of the next bull run. And so you're getting that and yield, I just think the pitch for Ethereum has just got infinitely better too. And when you factor in like all the L2s as well, because I said this yesterday, but like ETH was literally not usable last bull run. And so I think it's going to be much different this time around because, last time most retail was like using chains like Solana and AVAX and shit because it's like $400 for a swap on Ethereum. And just now the fact that it's all within like using the Ethereum security layer, the whole thing just makes a lot of sense to me. But I'm curious if you think, Captain, if you think that this L2s are like do you think this is the answer as far as scaling Ethereum? Like, do you think it's like, okay, like we figured it out, or do you think something else is going to come along later? I'm curious as to your thoughts.
I believe the burden is with the multi-sig still from a risk profile. While they're a legitimate enterprise and they're powerful and they're going to mature into something, what they're going to mature into, we don't know. They're not going to have the same risk appetite as compared to Ethereum mainnet. And the market, I like to say, tells us what people are thinking. Isn't that the case? We look at charts and we can psychologically get a sense of what the hell people are thinking. So if we all of a sudden see $100 billion on Arbitrum and $50 billion on mainnet and capital is flowing into Arbitrum, the market's speaking. So what the market's telling us right now is that the security of mainnet is paramount as compared to the security of the other chains. Security meaning, does a person feel secure? Whether it's perceived or actual is another story. But that's why the capital remains on mainnet and doesn't flow over to Avalanche. All these, the L2s have wonderful either ports or variations of the same systems that are on mainnet, yet the majority of liquidity remains on mainnet. This could be interesting playgrounds. They should all evolve and draw in liquidity over the coming years. But it's going to be interesting what happens with mainnet. If we're talking these types of growth potentialities for the L2s, you could only imagine what's possible with mainnet, where you go from $70 billion worth of liquidity to $700 billion worth of liquidity, and $100 million transactions are commonplace, and fine, $5,000 transactions. Someone running a $100 million swap from the United States over to Indonesia doesn't care about a $5,000 transaction through a couple of DeFi contracts. They won't hesitate for a second. So this changes the entire nature of how this is going to play out from an opportunity standpoint in the coming years. Just this a bigger perspective. There's always a bigger perspective to consider how big it really can get. I like to always say, all I want is a little bit of those transaction fees of the $100 million swaps, and then everyone could have all the fun playing around all they want.
Yeah,
Hey,
that's a
guys,
good point you bring up.
I'm just
Sorry, go ahead, Wabi.
yeah, I'm just putting up some things on the Nest so the listeners can interact with it. I'm putting up on the Nest the Ethereum Shanghai upgrade and some eigenlayer stuff if you guys want to check that out. For the listeners in the crowd, my name's Wabi. I host these spaces throughout the day. Sometimes I do them twice a day. Sometimes we talk price action like we are right now. Although most of the time we feature protocols on devs, founders, people from VC at times, you name it. We got it. And yeah, we'll be bringing on Sriram from Eigenlayer and talking shop. And as for our speaker panel in that space, we'll be having a number of founders from other protocols to partake in our LSD summit. So I look forward to that stuff as well. More virtual summits, LSD summits, Cosmos summits, AVAX summits, Phantom summits, Elrond summits, you name it. Tomorrow is our Elrond summit. They're now known as Multiverse X. I have no idea why. I think
Really?
because of some copyright. I think it's because of some copyright, wasn't it, Elrond?
Well, Elrond, it's Lord of the Rings.
Yeah, and also
Old
Amazon.
school.
I think they have like a copyright I think they almost got in trouble for that. But yeah, tomorrow we'll be having their biggest NFT platform, and also some of their dApps are going to be coming on tomorrow. So look forward to that, and also follow us here Because Bitcoin if you enjoy spaces like these. And shout out to Noah. Noah also partook in our earlier space in Market Check with Tommy and Max. So that was awesome. And also shout out to Dow Chemists. Big love to you, brother. You've been these spaces. Off man, appreciate you, bro. I think he's going to be joining us for the Landex one, and Landex is his partner over in Farmers Market. So Dow also hosts some spaces earlier in the day. It's really tough for me to make it, but thankfully he does record his spaces. So if you check through Dow's profile, he's always giving updates on when the next update of Farmers Market is. But Dow, I want to give you a few minutes, man. If you want to go into detail about the content that you produce in Farmers Market, go ahead, man. The stage is all yours. I want to give the audience an introduction on what you produce, because I think it's valuable content.
Thanks, man. I appreciate that. Yeah. So every week, every Wednesday, 12 p.m. EST, I gather a panel of builders and thought leaders to talk about a hot topic in DeFi and Web3. This morning, we were talking about obviously the Shanghai upgrade, what it meant. So on the panel, we had folks from Stata Labs, from Anchor. We had Adriano Feria as well, some of the footprint analytics as well. So it's always diverse, right? It's not just like one type of a panelist. The idea is to not necessarily like go as far as we can intellectually, technically, but it's to get a big picture for the audience, right? So they know what's going on, they understand what's implied, what are the benefits, what are the trade-offs, and try to make it as open as possible so that people who want to ask questions can participate. Next week, we'll be talking about concentrated liquidity AMMs. And so far, we'll have folks from Athena, so Solidity Forks on BSC. We'll have Alex, the CEO from Velodrome. We'll also have folks from a few other projects. And the idea, again, is to just break down this topic, make sure that people understand what it is, and why it's important, right? Like, as most of you know, like, this is a big trend right now for DEX to move from providing more of a specialist range for providing liquidity, so that liquidity providers actually make more money for the activity. But that becomes really hard to do because now they have to manage the price action and make sure that the price remain within the range. So we'll get into all of that, into the automated liquidity managers, that type of stuff, and why it matters to move from that, I guess like a standard liquidity provider to more of a specialist liquidity provider. So yeah, so every Wednesday, if you guys want to learn more about DeFi, we try to gather a panel of thought leaders and builders.
The evolution of AMMs and LPing is quite extraordinary. It's got a long way to go. Just as you're talking about concentrated liquidity, that's just an interesting start. It is a very hostile environment to provide LPing, but when you understand how to adjust and how to take such positions, it can be a lucrative enterprise.
Yeah, and there's some good projects. They're doing some great things in trying to reduce impermanent loss, for example. GammaSwap is looking at liquidity providers as option providers, right? And so, like, all the innovation is happening right now. DeFi is hard to keep up, right? Like Captain, you mentioned IPR. I could probably spend the next 2 weeks just learning, deep diving into IPR. But there's so many cool projects. There's actually a project called CVI, which is basically bringing the VIX, right, the volatility index, into crypto, and it's built partly by the VIX creator. So we're getting all those tools that TradFi is used to, and in my opinion, the mapping one-to-one of all the financial perimeter that we see in TradFi, they're starting to appear in DeFi. And as the map becomes complete, it makes it a lot easier for large institutions and TradFi to join DeFi and have fun and bring more liquidity, and with that, more maturity to the markets.
That's the great question that we all contemplate. What brings the larger capital? I think the capacity to unstake should over time encourage more capital to stake, more staking, not necessarily with the LSDs, but independent. Like if you're a large hedge fund or you're a family office and you got an extra couple $1 billion, you're not going to stake in an LSD and offload to a third party any control whatsoever. You're just going to pay $10 million for set up DevOps in a hosting center, and you're going to run it literally as a business in a family office. I mean, a family office literally isn't a building, a multi-million-dollar building with tens, if not dozens of employees. Family office is a business unto itself. So what gets folks like that kind of capital to deploy? I think the security of Ethereum mainnet needs to diversify, and it will. And this is the start with things like today. And that, as you said, coupled with additional institutional interesting projects, interest rate swaps, more powerful AMM tech and market making functionality, because that is a traditional enterprise. Bernie Madoff was one of the most famous market makers, aside from his sketch business, his illegal business. He was one of the most famous market makers in pretty much all of history. So that is of great interest to folks that have hundreds of millions of extra dollars, and they could certainly capitalize. They don't care about the appreciation of an asset. In fact, they welcome capital losses. It's a tax loss, but they were able to capture $20 million worth of transaction fees and also mark to market their LP position and take a tax loss. So a couple of interesting perspectives on how you could finagle LP positions with when you have a large enough size at play.
Yeah, I think market making in crypto in the future is going to be more towards DeFi and less towards like centralized exchanges. And I think you can see a lot of that activity being shown with TVL. You know, like with Phantom, you'll see Andre Cronje come back, and then all of a sudden there's like an inflow of 50 million going into Spooky or Spirit Swap. And
Right.
yeah, that's one way of market making, right? Or it's like injective protocol, right? It's something that like really kicked off at the start of the year. I believe their market cap in early January was like right around 100 million, and then they announced an ecosystem dev fund, sort of like, if you guys remember Avalanche Rush, and I believe that fund was like 2 times more their current market cap. So if you take into account like their liquidity, it was actually more like the money that they received was 4 times greater than the actual liquidity in the system. And like you look at Injective, I think the ticker is INJ year to date, it's astronomical, right? And you can call that a version of market making. And then when you have those incentives to participate in that protocol, like, you essentially force market making into the system by incentivizing users as well. So it's like a double whammy right there.
Well, to say the least, there's endless products. The complexity is there's still a lot of uncertainty, and there's plenty of reason to have restraint and still have a well-structured portfolio. Who's comfortable with leverage positions overnight? Most folks would say that that's not the most reasonable course of action. The market turns on a dime, and the smaller the market, the faster it turns. The larger the market, the more relatively stable it is. But just it's important to just remind folks of the climate. There's no certainty in markets, and there's they did not stop the banks from cascading further. And I look at me trying to talk macro. That's just something I always do. So just be cautious because what they did was they suppressed volatility. But that doesn't mean that the volatility, what caused it, went away. So there's all the reason in the world for capital to concentrate in the crypto space to these exciting, new, interesting offerings and the stabilizing characteristics of the network that are so exciting and attractive. But there's also potential forced selling and further liquidations in traditional finance that'll suck capital out. So just always have your head on a swivel in this kind of market. I try and remind folks. But what's everyone? Is everyone throwing around capital? Is that the sentiment of the market?
I was gonna pass it over.
Definitely what it feels like.
I was gonna pass it over to Will. That's his area of expertise, man. I'm easy mode. I think Will, if you want to give some of your thoughts in that regard, I know you've told me recently that that you actually interact with some of these like broader DeFi protocols, man. And I quite frankly didn't know that. I thought you were just primarily just
me too.
like
I thought you were a equity
yeah.
guy.
You thought I was what?
Just an
Like
equities guy.
Yeah, I thought you were like spot
I
ETH,
didn't know.
spot BTC, and then you participated mainly in like commodities and like equities and emerging markets.
I played both sides. Like I came from the markets, but like I've been in crypto since about 16, to be honest with you. I as far as crypto goes, like I've seen the cycles. I know the rotation. I know like where the liquidity is. I know how to like spot liquidity before it moves. Um, it, the market's pretty easy to read. I think just people overcomplicate it. People try to read into the bigger caps versus looking at where the smaller caps are and where the big liquidity will push numbers, right? This is why like I never really try to necessarily promote Bitcoin or Ethereum as much as I promote like smaller caps and stuff like that. And that sounds crazy, but I do numbers on a lot of these smaller cap coins as opposed to Bitcoin and Ethereum. Not saying that Bitcoin and Ethereum can't be bought or you shouldn't purchase them, but like,
you're not going to get the multiples.
You're not going to get the multiples. Yeah,
The biggest scams
like
pump the hardest.
8x. Like I mean, I could tell you like all through 2021, I was putting in like 500 here, coming out with 5,000 to 15,000 there. I was putting in 250 here, coming out with 25,000 there, and that was regularly because I was spotting liquidity before it was moving, and that's all you got to do in this market. That's why like I'm not chasing Solana, I'm not chasing Ethereum, I'm not chasing old coins, I'm chasing new coins. And I'm looking at them and I'm paying attention to them. I think Arbitrum is a go. I think a lot of new coins are a go. I think there's a classic rotation, and that's you're looking at things like launch pads. I think that a lot of people ignore those until it's too late. Launch pads go from like pennies all the way up to like $5-10 a piece per token. And then they drain back down to pennies again by the end of the cycle. And that's just because everybody piles into them to get into the new hottest thing at the top of the market. And, then they get sucked back out at the end. You can make a lot of money just buying Launchpad token, let alone you can get into launches. And then same thing with file structure tokens, which like Filecoin.com. I talked to you about this morning. These are just asset rotations that get moved into towards going into the emerging market as it comes. I think we're on the brink of a market. I don't think we're there yet because of the halving. I believe in the halving, right? And I think that's where a lot of people, I think they're looking at this as if it's going to turn into the full-on bull, and I think that it is, but after the halving. So I'm preparing myself for that halving. Like there's a lot of things that are still 95, 96% down. I'm not worried about if the market dumps tomorrow. I'm buying those things because they're down so much. They can go down another 96%. That's only 2% down from where they are, right? Like the losses are not significant to the gains. And that's the items I'm positioning myself in right now. And that's why, like, I'm not worried about my positions personally. And whereas, like, if people are positioning themselves in Ethereum and Bitcoin, yeah, there might be some upside, but like, you also could feel some significant downside if there is some downside. And that's another situation too, right? That's its own situation. But this is just the way that I'm positioning myself in the market. I'm positioning myself to where I'm in things that are so far down to where basically these things have to die, or I'm not going to see losses pretty much. That's kind of where I'm at in the market right now, and that's where I think the real gains are. Do I think I'm going to feel pain in the short term, midterm? Sure I am. But am I going to see significant numbers going into the next cycle? Yeah, because I can tell you,
it all goes multiples.
Yeah, I got 8 at 2 cents. 2 cents. While everybody was scared to touch it. And then everybody told me at $3 it was going to 10. I was like, yeah, we'll see.
Right.
That was the biggest sell the news event ever when the
90 billion. I was like, I'm out. Market cap's 1/3.
No, that was stupid, dude. I think that was probably one of the most absurd runs from last cycle. If you really think about it, like, yeah, what was the Pico top? Like 90 billion?
Yeah, it was 90 billion.
Jesus Christ, dude. Like,
I sold every bit I had. Every single bit.
Yeah, you know what also did?
Way too early. I bought it at like 3 cents last cycle and sold it at like 12 cents. And I was like, thought I was fucking hot shit. And yeah.
Good old land.
But only in crypto can you be just livid at a 500% gain.
But that's what I'm trying to say is like that's why when people are like look at Ethereum, I'm like, yeah, it's there. I'm like, I could buy it. I'm like, but I got
diminishing returns
over here that I can make a lot more money on. So
I think all the LSDs are gonna just be the L1s of next cycle, right? I think I just don't see it any other way. Hentai Avenger said this too, but
so Egan Layer would pretty much be like a Terra, basically. It would literally be Luna.
Exactly.
Yeah.
Dude, I mean, I'm disgustingly bullish on Egan Layer. Like, I think Egan Layer is probably gonna do like at least a 50x.
Here's the thing. I think Arbitrum minimum 50 billion. It's at 1 billion right now, right?
Like, yeah, I think it can reach the same valuation.
I agree.
I think it could reach the same valuation as Uni did, or at least 1 inch the next cycle. Whatever their all-time high was. Uniswap just like, I mean, it rugged after it pumped from $3 to $10, and then back to $2, and then it 25x'd in 3 months going into the Coinbase IPO.
It's hard to move those markets. You need at least 10, 20, 30 mil to move those scale markets. But ultimately, every market, every asset operates on very predictable behaviors. And it all, I'll tell a brief story. It all reduces to biology, predator and prey. And the size of the market allows for smaller predators, 5, 10 mil markets, 100 mil markets, different size predators. And if you have a capacity to come into a market with 30, 40, 50% of the market cap with stablecoins and move a market, you start the bullish process, which draws in capital. And there's 2 ways to play markets, especially in this type of climate. You're either the market mover, and this type of predator-prey psychology or biological phenomena, or you can watch for the breakout. And the breakout isn't caused by a person pumping in, even 100 people pumping in 1%. Tiny, small, relatively small positions. It's the large mover that triggers the breakout. It's not like you're having leverage shorts cascade on micro crap. That's not the case. This is DeFi. It's not necessarily the centralized exchanged phenomena. And when you see that breakout from the large actor, it's kind of like you're the small prey, but you are swimming with the predator. You know, those small fish that sees, hey, there's a shark. He's about to go chow down. I'm going to go mop up his leftovers. So you're able to move with the large actor that just triggered the breakout, catch gains with all the capital flowing in. But just remember to get out prior to the large actor. Because when someone with 50% of a market gets out, that's probably by definition a rug in most regards, but it's just a large exit, and that triggers the cascade in the opposite direction. And we see this time and time again. That's when you see the directionality shift. Wonderful assets, but it's classic. Grail is probably one of the more obvious ones recently.
If you're positioned now, you know, up into the bull run, somebody could rug at 50% by the time this whole thing gets started. It wouldn't even matter. Like you'll be so far up, you'll see it coming before it happens.
Depends the asset.
Yeah, I mean, it's like the people who like bought like, you know, ETH at like $250 and then like watched it go to like 80 during COVID. You know, like if you held, like you still made like a disgusting amount of money, right? So it doesn't really matter.
Yeah,
I also think. Oh, sorry. I was just gonna go back to Arbitrum real quick, Will. I think that was a good point about it going like to 50 bill because, I mean, dude, it's like it has a way higher TVL than the market cap, and that's
exactly.
like that's been one of the easiest trades of the last 6 months over and over again. That I keep telling people, like, it's basically an ARB. Like whenever there's a case like that, when there's a higher TVL than the market cap, like the logical reason is like, okay, well, this is oversold. Like there's no reason that this should be worth less than the money that's staked there. I don't know. That just doesn't make sense. And like it's worked with like Aave, Lido. there's a bunch of different coins that have like really high TVLs, and the market cap is only like 20 or 30% of the total value staked there. So that's one of the easiest trades you can take, like just short term. It's like, dude, that's gonna repeg at some point where the market cap is gonna reach at least the TVL. Like that doesn't make any sense that it's different, you know? So
yeah, it's the same thing. I caught Luna the same way. I caught so many coins last cycle before they ever moved the same way, and I can tell you, like, it's not a hard game to play, and you're basically just snaking them before the move happens, and the capital, like, I've come when I first started in these markets, I came in with position sizes of like 250 per position. You know, now I come in with like 2,000, 3,000, 5,000 per position on each one of these and snake into them, and like I'm telling you, the numbers you come out with on the top of these bulls is just stupid. Like.
That is the complexity with Arbitrum, the other L2s, even Optimism especially. It's a smaller liquidity environment. You go on that network, you transfer over $100,000 to $300,000, and it's quite a playground to capitalize. You cause a breakout on a $1, $2, $3 million asset. It's quite fascinating to watch that kind of market action. You see the buy pressure build up. You see the smaller transactions come in, and it just keeps going. Position size is the hardest thing to really be careful with, and also take advantage of from an opportunity standpoint. But notice what you said: to snake in and snake out, and that's good. Then that's what's necessary, because someone that came in with 50 times that size probably caused the breakout of a moderate size, like of a $5 million asset. A couple of $1,000s doesn't cause a breakout on a $5 million market cap asset. But you got in and out before the guy that threw around the $500,000 that caused the significant breakout. And that's how you are able to play around in these playgrounds and turn smaller positions into much larger positions relatively quickly and get these big multiples.
Well, that's just somebody who knows what they're doing versus somebody who doesn't, right? Like people that know how to position themselves well can get into something before anybody else can. And there's a lot of people who just have no clue how to do that. You could sit there and scream all day, by the way, free and basically, or fee and sit there and tell people Arbitrum. They're not going to care. They're going to wait until that $50 billion valuation is going to come, and that's when they're going to buy.
They also don't know the technicals. They're not watching for the falling wedges. They're not looking for necessarily inverse head and shoulders or even descending triangles that break in the contrary position to the direction to the upside. And then the breakout carries through, and it has weight, and it has momentum. And these are the types of things that obviously we look at, and we could always encourage folks more and more to look at. So, as folks do better, the markets are stronger and healthier. More liquidity is sticky. More participants stay. And then it's going to be a hell of a couple of markets in the next couple of years.
Yeah, plus TVL's been a really big factor in a lot of trading too. Like when I've been looking on chain, TVL's been pretty crazy on a lot of these valuations where these things are just so far under TVL, and a lot of people are just ignoring that factor with TVL. They're not looking at these things, and they're like, oh, it's just down. It's been down. It's just red. They wait for the move out, and really that's the wrong position to be taking. Like especially like with the what's called the platforms that basically allow you to get into projects early and stuff like that. Those ones right there, a lot of people they're ignoring those. They are completely ignoring them. It's going to be to their detriment at the end of the day.
Well, number one rule, you can't ignore anything. The worst, the only bad opportunity is a missed opportunity. So a good friend on Twitter said, what did he say recently? He said, if you're not spending 100% of your free time digesting what the hell is going on, you're missing something. But you could do pretty good if you allocate about 70% of the time, but you're definitely going to miss a fair amount of the opportunities. But that allows for survivability. It's very important that's the most important thing that I express to people is to remain in markets, to understand how to lose less and survive more. Because just as you described, just being in the market now from this relatively bearish market to the heading into whatever future exuberance we know these types of markets are capable of, it just matters of being in versus being out.
Yeah, there was a great tweet from Hentai Avenger I saw recently that was like, all you nerds are worried about like the short-term price action, like when your real biggest risk is not having exposure to the asset class that you're early on and is inevitable.
Dude, I want to mention something, man. I want to mention something. I saw a post, and this reminds me a lot of like October. I'm talking equity markets here, but there was something called like the put to call ratio, whatever. In October at the lows, it was like the highest it's ever been, and we ended up bottoming in October. And now, the amount of shorts that are in the market are the highest they've ever been in over 10 years since 2011 during the whole flash crashes stuff. So I'm thinking to myself, dude, this is just 2019 all over again, right? In tech in general, I don't really pay attention to like, boomer markets or anything like that. I mean, because the S&P's been around for like what, like 100+ years, and the Nasdaq has only been around for like 50, barely 50. So I think tech is here to stay. And dude, when you think about it, right, Microsoft owns 49% of OpenAI at a $10 billion valuation, and they're gonna run that thing up quite a bit. Like 10 billion is quite undervalued for what OpenAI is going to be, right? Like,
Yeah, it'll hit $1 trillion easily. Like,
yeah, and I think
that's
there's an update now.
Picture.
And dude, there's an update now with OpenAI that basically when someone speaks to you,
Auto GPT.
AI, the AI actually like responds in verbally, instead of just like, written words. It actually speaks for you. So if you're having a virtual interview, right, you just set it up, and then it speaks back to the interviewer in your voice. And that is like, dude, that's power, man. That is power. But
One, let me let me throw some names out real quick, and I want you to. This is recorded, right? Go back and revisit this recording in the bull run and see if these things don't run stupid. So here's one, Polka Starter. Here's another one, Dow Maker. Here's another one, BSC Pad, Meta V Pad.
I remember. I know those names, dude. I know Polka Starter. I remember that.
Yeah, all of these guarantee top of the bull run. These are the top runners. Guaranteed.
But the thing, like my contrarian statement to that is, why would I go into something like Polka Starter when the polka dot narrative didn't really catch on, and went towards like the things that, you know in like, basically their focus was the UIX experience, and also the transactions and all that stuff, and bridging. Why would I go into Polkadot when like the onboarding process is so bad, and we're gonna have like newer launch pads, like Eclipse Pad, right, which work with Say Network. Why would I
I can
choose
give you the
Dot
narrative
over Say?
for starter. So Polka Starter, the reason why is most Polka Starter projects just end up being Ethereum layer projects.
That's basically like, almost like Kusama, is it not? Like, I remember Moon River, right? Like, that was supposed to be the precursor to Moonbeam, and nothing really happened to it. And so I just think, dude, that like, yeah, Polkadot, like, it's not gonna go anywhere. It's still gonna be around, but like, for like a liquidity bet for maximum return, like, like the average market participant, or rather the new market participants, they're gonna go to like the things that are good marketing teams. Like, you can have all the good tech that you want, you can have a fancy bridge and all that stuff, but like, if there's no marketing behind it, it's just it's kind of cooked.
So
Even more important is their liquidity behind it, liquidity flow.
What I'm saying, Wabi, is not Polkadot, right? So what I'm saying is the projects that are being hosted on Polka Starter, right? So like gaming and everything else, different projects. So all those projects is just Polka Starter is just basically a platform where projects can be hosted. They're not necessarily going to be launched on Polkadot, right? They can be hosted on Polka Starter and go on Ethereum. They can be hosted on Polka Starter and go on BSC.
Oh, so you're talking about like the products that are launching on it. So like,
yes, ICOs.
I see.
ICOs.
Yeah.
So these are ICO hosting platforms, the ones I named.
Yeah. That's essentially what Eclipse Pad is gonna do, for Say Network. And man, Say pretty much has it all, man. They have pretty much all the market makers that survived
The biggest one I've
last market
seen,
cycle.
and I would say look into this, you can verify, is DAO. DAO Maker is the biggest one I've seen.
DAO, can you describe like your experience with DAO Maker? It seems like that would be something in your fields.
Oh, I have zero idea, man. I haven't used those launchpad. The few that I've used.
The thing about Polkadot is like, I could low key see it pulling a Cardano next cycle, because it is like it is the most held coin like amongst all the VCs. So I think that's probably a case to be made, like Aptos, where it's like, yeah, like the FDV is probably fucked on this, but they're also gonna scam pump it and not let it die. So I don't know.
Yep.
I doubt they're just gonna like Polkadot will probably be a thing at some point, because it never took off last cycle. So I mean, like all those, like, do you remember parachains and like how much hype there was behind all that? Like, I don't know. Maybe I think there's probably a decent chance that like something comes out of that. Like literally nothing came out of it last cycle. So
I mean, it did do something crazy, like a 27x.
Yeah, my 2 cents
Yeah,
there
but
is
I'm talking about the stuff like on chain Polkadot. Like, yeah, there was a couple ones that definitely ran, like no question, but there was never like a huge Polkadot rotation, like there was for like AVAX and stuff.
yeah, I agree with that. I think King Webby, you're onto something, which is Polkadot has a great tech, great team. I actually met some of them, fabulous, very intelligent guys, and the network that they're building. If you want to build your own chain, right, and you want to leverage the modular architecture, it's amazing. The issue that they're facing is exactly what Captain was saying: is that there's not enough liquidity, and there's not enough marketing, and I would say there's not enough of a market altogether. So I think sometimes in crypto we're guilty of creating solutions to problems that don't exist or don't need to be resolved just yet. A lot of the products that we hear in crypto are kind of like future solving something that might be needed in 6, 12 months, 18 months from now. But there's a few and not a lot of project that actually really focus on or able to get product market fit, where the market actually need those products today and they're solving a problem to protocols or users today. Right? And I think those are the protocols that you can almost sleep on them because as long as there's a market and people need them, then they're going to be around, and the TVL will grow, the adoption will grow because they just find that problem everybody's having and they're solving it today. And so I'm sure there's plenty of projects that will be great in 2 years from now, in 3 years from now, but you got to wait, and that's an opportunity cost that you're missing on.
Well said. The opportunity cost is a very complex thing to avoid. This is why I very much look to liquidity. When there is a large amount of liquidity, that's predominantly where you're able to capitalize, because in the end, you want something to appreciate. That requires buying. That means that requires liquidity to be available. And when you want to sell, there has to be capital to buy it from you. And that means you need liquidity to sell. You need liquidity to both buy and sell. And then you need the capital transfer mechanism. So the bridges are significant in that regard, not necessarily from a capital allocation or investment standpoint, but just a means of getting your capital from one market to another so you could actually use it for the purpose of what you're doing here. If you just capitalize $5,000 on a couple of days worth of trading, probably want to put a couple of $1,000s on a debit card and pay some bills or go out to dinner or what have you. And that's predominantly like mainnet. I mean, Polkadot has integration and not Polkadot. I'm sorry, Polygon has integration into Juno and stuff, but mainnet really has BitPay and Spritz Finance and all of these great ways to offer out capital direct to debit cards so you could spend. And there's such an unspoken thing. We talk about how to capitalize, but sometimes I like to remind folks we really first need to know how to spend, why we're here. We're not necessarily here just to make money. We're here to make money to spend it. So why not learn how to spend it first?
Yeah, I think just going back to like the alt conversation too, you can do really well whenever a new chain launches and just buying like all the most liquid tokens on that chain. It's like it's been a tried and true formula that literally never fails. Like with Arbitrum or ZK or like any new L1 either, like dude, just buy like the most lucrative, buy the DEX token, the shitcoin, and the whatever other protocol you might like on there, because I mean at the end of the day they're all pretty similar. And so if something ran really hard on like one chain and then there's like a similar product that's developed with a good team on another, it's probably going to do something similar. And yeah, so like I think ZK will probably be the next one to come up, because I mean that airdrop isn't going to happen until next year, but like I bought like ZK Doge and like a bunch of other just random coins on ZK, because I mean that people kind of forgot like how that was the original scaling solution like before Arbitrum and stuff, and they're definitely going to probably be like the biggest competitor to Arbitrum besides Optimism, and those three L2s are probably going to be like there's going to be tons of money to be made. And same with base. I think base is launching later this year too. So just like literally the second you can go on that chain, just go on Deck Screener and buy the things that are the most liquid, and you'll probably do pretty good. It's like super left curve play, but it's profitable like 95% of the time, I swear, if you're early.
Do you guys see Noah as a co-host by any chance?
No. As a co-host? Oh wait,
Yeah,
yeah, I
yeah,
see him as a co-host.
yeah. Is he speaking at the moment? I'm not able
No,
to.
I can't hear him either. I don't know if he's speaking.
Oh
Might
gosh.
have to leave. Probably have to leave and rejoin, to be honest.
Yeah, yeah. Noah, just drop down from co-host, and then we'll bring you back up. But yeah, man, this Arbitrum airdrop's kind of reminds me of Blur. You know, it causes like one more leg up, and now it's just some crab action going. Wonder how do you guys think it's gonna play out for the next quarter?
The crab action is the best part, man.
Yeah,
You start,
get me more crab, dude. I can accumulate spot.
well, when you start to see crab, that means accumulation's happening. That's what it means. So
Yeah.
nothing really to fear there, I would say, with crab. And plus, I think a lot of people, what they do is they confuse airdrop with heavy selling pressure, and so they refuse to buy. And typically, when they refuse to buy, that's usually when the price has already hit its bottom.
That's facts. And then there's always like the disbelief pump. I think you just have to be like on your toes as far as price action. Like I think the mistake a lot of people made and like are literally still making is like they're just not like they're just have all these biases from, macro or whatever it may be. And I think that the thing is like about because the big deal is like the recession, right? Like everyone's worried about the recession, and so that's basically the only reason that people aren't bidding is like fear of a recession. And so um it's like, okay, well, if this recession ends up like either not being as severe as people are anticipating, or it doesn't happen at all, like if we do end up getting a soft landing, that would be like by the time people actually realize like, oh, it's not going to happen, like these prices are going to be way higher. And so if that occurs, and so I just think that the risk to reward of like not holding any spot is like way skewed to like negative EV, because I don't understand why you would like 85% of people think a recession is coming. Like 85% of people. And it's like, what's the most basic rule of markets? Like you don't want to be on the side of everyone. Like you don't want to be on the side of everyone for the most part, right? And so I don't know. There's just something like there's never been a recession where 85% of people have anticipated it. So like, and this is relating to like institutions and like how institutions are positioned, right? So if that's the
Well,
case, I don't know.
I think you're right though on the I think people may be right on the recession, but typically
Because
if you are, oh sorry, I didn't mean to cut you off. I thought
oh
you
no,
were
you're
done
good.
talking.
I was just saying like if you take all your biases, like everything, I think that's the biggest and most important data point if you're like taking a look at macro, is just like how many people are truly anticipating a recession. And there's never been a recession in history where 85% of people have anticipated it. And the basic rule since the beginning of markets is if everyone's buying, you want to be selling, and vice versa. And so I also think that there's like we haven't really got a real retail bid yet. Like the people, I don't think retail is going to start bidding until like we're at 40K or something, right? I just don't like retail doesn't catch bottoms for the most part, like unless you're deep in the trenches on CT. And so it's like because people have been like, oh, everyone's kind of euphoric, like we're like everyone seems like they're bullish as fuck, like I'm gonna fade it, right? And that's gotten you fucked all year because
Well,
sorry,
to add to
go
that,
on.
I just want to add to that real quick before you move forward. I think what it is just all the trolling, but the trolling's been happening on both sides, bulls and bears. I think you got all these degens that sit there. It'll never go below this price. Just like it'll never go above this price. You get all these people that pretend like they know what they're talking about. But when you go to their feed, they've got like 5,000 people they're following and 2 people following them. That means they're consumers, not producers. And consumers are people that look at other people's feed to figure out what they need to do, whereas producers are people that are looking for their next moves are typically people that have a bunch of people following them. And I'm not saying that's necessarily 100% true all the time, but that's typically true, right? Like if you have a decent following, it means that a lot of people are following you because you tend to make your own decisions. You don't follow other people's decisions. You make your own decisions. And that's the way I always look at it. You got consumers and you got producers. Producers are doers. Doers are people that make things happen. And those are the people that tend to be on the right side of the trade most of the time.
I'll share some insight into a perspective that's not often considered. I'm big into macro. I understand the system. I understand money better than a lot of folks. What is money? That's a whole nother story. But to me, the charts look interesting. And you have the stories and the narrative, like the buy side collateral is falling short, and U.S. domestic retail is the marginal buyer of treasuries, and who's going to buy the treasuries? The Fed will buy the treasuries, and there's plenty of ways to spin the narrative all over the place. But there's 2 critical charts, obviously you guys do charting, that I think are worthwhile to mention that with a little bit of explanation, give some great insight. MOVE, M-O-V-E, bond market volatility. Historically, on the monthly, the TWAP, when you breach the monthly TWAP to the downside, you have many months of continuation of decreasing bond market volatility. And there's plenty of counter narratives to it, but from a technical standpoint, that is historically what occurs. When you have decreasing bond market volatility, you have decreasing currency market volatility, which means generally continuation in the prevailing direction. And if you look at the DXY, you have decreasing directionality. Decreasing DXY is increasing systemic liquidity outside of the United States, and these are conditions for significant outperformance in volatile markets. The crypto is not a U.S. market, which is exactly why it responds extremely favorably to decreasing relative dollar valuations. I think the charts are primed for continued decrease in bond market volatility, which will put further depreciative forces on the dollar, which will increase international liquidity, which will put upward price action on the crypto markets as a whole. And this probably is going to coincide with some sort of pivot and a very defensive posture for the U.S. regulating authorities, which, if it could play out, we've all been looking for the decoupling for how many years? In the decoupling, where you have significant depreciation of U.S. equity markets alongside meaningful appreciation of crypto markets. So there is great value in macro. It's just you need a different perspective than most people tend to consider. The charts look good. MOVE and the DXY speak incredible stories. Sorry, I digress. That's common.
No, don't apologize, man. We love the rhetoric.
Is that recessionary or non-recessionary?
I think it's irrelevantary. Recession is U.S. domestic. It's U.S. domestic. Does the U.S. matter much in the global liquidity equation? Yes, but it's marginal. The U.S. is not the majority of currency units on the planet, where the majority of transactions are done in dollar denomination. But the U.S. only is 30-something% of global volume. The vast majority of capital is not dollars, or at least not created by the U.S. It's really like the euro dollar system, which is dollars controlled outside of the United States. So most of the global financial system is not controlled by U.S. regulators. And that just presents a backdrop where they're forced to protect the functioning of the U.S. domestic system. And to do that, they have to allow the international system to actually think the U.S. is doing something to help them. So the dollar destroyed international markets in 22. It was an absolute bull run of bull runs. The last time we saw a bull run like this was 1985. If you look at the DXY on the 6-month chart, you'll see the most remarkable shooting star candle in 1985, and then in 22. There's no other shooting stars like this. And the shooting star is the pinnacle of a technical reversal. And then so the technicals just speak volumes about where things are heading. But when you look at a 6-month chart, you realize this shit's going to take like 1, 2, 3, 4, 5 years to fully play out. If you start to see the DXY fall through 100 down to 98, 97, 96, what are the biggest bull runs? The bull runs of the crypto markets was the DXY going from 102.98 to 88, and that was from 16 to 17, January of 18, end of 17, and then the 20 bull run was about January of 20 to about a year, to January of 21, and that was the DXY going from about 103 down to 89, and we just blew a shooting star candle with a wick from 104.68 to 113. This is almost a larger wick than 1985. Absolutely technically extraordinary. And then when you put, I wish I had these charts that I could show you guys. They're quite extraordinary. How much of a blip on the radar the entire bull market, the history has been for the crypto markets. It's so small. It's quite fascinating.
Yeah, I mean, the total crypto market as a whole is pretty small, I would say.
Well, it's zero, technically. It's literally, it's a rounding error.
Yeah, it's very.
It's not even 22 trillion. That doesn't count euro dollars and the international debt construct. There's arguably over a couple of quadrillion dollar liabilities in circulation. You could buy crypto not having paper dollars. In fact, most people don't buy crypto using paper dollars. It's not P2P like that anymore. Most people use a transfer from a bank account. So a transfer of dollars from a bank account in the U.S. is the same as a transfer of dollars in a bank account in Britain, but those aren't dollars. Those are dollar liabilities. So there's way more dollar liabilities in circulation than actual dollars. It's a tremendous amount of currency spread out.
What you're talking about is the fractional banking system, as long as the fractional banking system is allowing for expansion. But right now we're in a contractionary fractional banking system versus an expansionary fractional banking system.
True.
I would say.
Well, since 08. Since 08, total currency units in circulation globally has been disinflating. But domestically, obviously, it depends on which market you expect capital to flow in from. And my expectation over the next couple of years is the U.S. to be in a very big defensive posture, giving our debt load. And we're going to be focusing on internal issues, in my opinion. And I think, sure, recession. not necessarily a recession in parts of Southeast Asia or Australia? What happens if all of a sudden you have significant economic activity in Australia and $100 billion flows in from Australia? That's going to be a hell of a bull market in the crypto space. So you too much emphasis really on the U.S. market. Maybe it's because we're from the U.S. Just remember, the biases are what catch a lot of folks off guard. Just as you're saying, when everyone's short, you go long, and when everyone's long, you go short. When everyone's looking at the U.S., start looking at the rest of the world, and that's where the currency comes from.
I think I think the market as a whole is split. Personally, I think that's the biggest thing. Right now, half the market is realizing the move, half the market is not realizing the move, and then on top of that, you got a lot of the market that's split down the middle, and you got a bunch of trolls who have no clue what they're talking about on top of it. And then so it's like who's right and who's wrong, and that's what creates that selling, that buying pressure that keeps the squeeze on the market.
True.
To where the market can't go up and the market can't go down.
Yeah.
And really, the market has to make a decisive decision. Does it want to go up or does it want to go down? And that's where participants have to be on the same side. So, and what I kind of looked at it, or the way I kind of looked at it, and this is something I brought up earlier today, and I posted on this today. I said where the reversal, or not necessarily reversal, but where the real pullback will occur. So we will continue up. We're going to continue in the trend that we're already on. And I said where the real pullback will occur is when bulls and bears actually converge, and both of them become bulls, right?
Yep.
And when those converge, that is where you will get your real pullback. And then when you get your pullback, that is where you take your real positions for the uptrend for the real market. And I think that is what will happen prior to the halving. That's what I am anticipating personally for the market. I'm anticipating bulls and bears to converge at a certain price point. They finally concede. They finally agree. They come into the same agreements that we're in a bull market. The market then reverses, scares everybody into a position of defensive. Everybody sells out their positions, pushes markets down to significant degree, and then we get down to a certain point of retrace, not sell down to lower lows, but a retrace, a pretty significant one, and then we move into the actual bull run going into the after the halving.
Reasonable.
That's my anticipation for the next move for the market as a whole. That means we can move up to 35 before that happens. Means we can move to 40 before that happens. But that's my anticipation.
Lower lows are not something I see at all. I agree.
Yeah, I mean, at this point, I think this year we will get some big like capitulation event. I think that's probably inevitable. If we're gonna really like go on a big run. But I still think that like if you take a look at some of these tokens, like Matic, for example, like it was like 33 cents on the June low, and then it's basically just been like around $1 since then. And even when we had like the FTX shit, and same with ETH, like ETH was like 3 digits. Like I don't think we'll probably get that again, like barring like an insanely big black swan. Because it's just like, dude, at this point we had three huge black swans last year. And so if you actually look at that, like from a probabilistic standpoint, what is the odds that another one of these events happens again outside of a recession that's specific to crypto? I mean, it's impossible to predict, but like you can just go and look and be like, all right, well, we had 3 insane blowups last year. So
I can be 100% on board with that. Just FYI, like there is no denying that what you were saying is not true. I can completely be on board with that. But what I would say to counter that is then I won't touch them. I'll buy something else. There's plenty of other things that have just as much opportunity, if not more.
Oh, so yeah, for sure.
That's the only thing I'm going to throw out there, just for the crowd.
Yeah, no, I agree with that as well. All I'm saying is that we might have this big capitulation event, but it might still be like 60% higher than the price right now. Like if it's like some low cap thing, especially, right? Majors, that's like harder to set. That's probably less likely, but some like when these alts that are fresh charts catch a bid, it's like OXO and stuff like that. I mean, there comes a point where it's like, all right, well, it's even if we have some insane event, it's probably gonna still like make a higher low than the current price. Like
I agree.
especially if we end up going to like, dude, if we end up going to like 48K or some bullshit, are you? And then we pull back to like 24. Like I could see that.
Some context. There was some context in 19 when we had the repo crisis. Well, it was before that. That was the low in 19. You're talking 33.51, and then the low in March of 20 was 38.71. It was literally just like trying to hit a lower low, but it didn't. But the market structure is so different. I don't see how we get close to that kind of retrace back down to the lows. It makes no sense. We're talking about such a different market and a perception of Bitcoin as a collateral asset, and the significance of Ethereum as a technology network. It makes no sense for that kind of retrace. In fact, I think that's more of an opportunity to take that higher low position if we get lucky.
I'm thinking that we do get that higher low, like Q3, Q4, but we'll see. I mean, you never know with this market. What's up, guys, by the way?
What's
I
up,
was
Fonzie? How you doing?
good. I tried to come in earlier when you hit me up, but I was at the dog park. But yeah, man, I agree with exactly what he's been saying about the market. I've been talking about this 48K for a while, at least, since like January, December area, and I mean, it's starting to come to fruition now, and now it looks obvious for people. But the market, I mean, looks good, and people forget it's not just a U.S. market, like you were saying.
There's some big structural levels. A lot of folks look at price levels, and I agree with price levels, but I also like moving averages significantly. And the weekly 100 SMA was above head. Where is it? Looks like it's around 33,000. So there's definitely resistance above head, but that makes perfect sense. You get up to 33, you pull back to what? The 200 SMA in the weekly, and you got 25, and there's a higher low. And the TWAP's not far below the 200 SMA, and that would be a wonderfully bullish, staircase pattern.
Yeah, that'd be nice. I don't even know if we get 25, man. Everybody and their mother wants 25.
Yeah. The shorter term time frames have the shorter term moving averages that have moved up. I guess you could go to the daily, but then you got the 50 SMA on 25,000, but you got the TWAP, you got 28,000, so you got some decent support down on the daily level on BTC. But the weekly and the monthly, there's some room to the downside. I'll be at the 50 SMA on the monthly is at 24. So it looks like there's a lot of support at about 24, 25 right about now if you get enough of a thrust to the downside.
Yeah, 25 for me is just it just respects the overall structure, right?
Yeah.
Like it's not even about wanting 25, it's just structure.
Yeah.
And if you disrespect structure will come back and bite you later. And that's the way I typically look at it. So if you overreach, you'll typically overreach to the downside, and that usually can end up resulting in a bad way.
What are we thinking about BTC dominance and ETH BTC? I think ETH BTC probably bottomed today, to be honest.
This entire pump since the end of last year is kind of similar to 2019 to me, and so far it's made sense. I mean, price has kind of reacted in the same way, like in that pump that was about middle to like beginning of fourth quarter of 2019. So like right around six, but I don't think we're like making all-time highs anytime soon or anything like that.
A catalyst for all-time highs and that kind of redirection of capital. But it's incredible how it's Bitcoin versus everything else. So that's just an extraordinary result of all the history we've been through in the crypto space. But that's the bottom line. If Bitcoin's outperforming relative to Ethereum and obviously the network, DeFi in general is a negative sum game. From a trading perspective, that is the obvious course of action, as Ben Cohen loves to talk about. I see plenty of argument to underperform as a reasonable course of action, but that's another story. I personally find interacting in the DeFi space quite comforting. So many folks are so overwhelmed. As I've said so many times, it's about surviving, and it's so simple to interact in the DeFi space, at least the stories I tell with my content, that I am more than happy to underperform Bitcoin, not having to trade it, just by having exposure to these structured products, these Forex markets and money markets that are going to do what they're going to do, whether Bitcoin's outperforming or not. It's just endless opportunity, really is. How's Aura doing? Aura did a nice thrust down to 275. Structurally, this is such a fascinating chart. There's only a couple of charts in all of crypto that have done this horizontal.
What chart?
Aura.
Aura?
Mm-hmm.
That's
Aura
the one
balancer.
on near.
Oh, okay. Gotcha.
Yeah. There's only 3 charts that have done this horizontal price action. In my opinion, it's Curve, Aura, and Lit from Bunny has had this horizontal price action. It's a manifestation of what they do with the tokenomics. They have such emissions, but the emissions are recycled. It's quite an atypical chart for basically all of crypto markets. It's interesting.
Curve is cursed. That is a cursed coin.
Technically, it looks like it's in a stunning position, though.
The best thing for this whole move for me is that most altcoins have held back, so they've given people plenty of ample opportunity to take positions if they wanted to. While BTC has made these moves, and I love it, to be honest with you, because typically after BTC ends up going wherever it goes, these altcoins usually end up exploding to a certain position. And you can make multiples on these type of moves. And that's the way I'm trading this whole move right now, is I'm just waiting for BTC to make its move, and then I'm gonna take my altcoin positions and take my multiples and then move that into fiat and then kind of trade this down. I do believe we get that retrace going into the halving, so that's the way I'm positioning myself right now. I'm just waiting for that whole move to play out. Again,
I wanted to throw something your way, man. Not to cut you off, Will.
Yeah.
But I wanted to throw something in Noah's way now that LP is here. What are your thoughts on the casino narrative, right? You have ZK Casino, you have Dara Bets, and you also have Rollbit. And I kind of want to throw attention to Rollbit. Do you think that's going to be like the next Terra, where it just goes absolutely ballistic? And then something just happens out of nowhere, because they're already catching flack. LP, if you want to jump in here, feel free to do so. But it's like they're already starting to catch some wave, right? And usually wherever there's smoke, there's a fire.
Yeah, I think we will always see the exuberance. We will always see extreme concentration of capital as something that catches a narrative. I don't think we're going to see anything remotely like 2020. There was such an extraordinary supply of capital from U.S. retail that's not coming anytime soon. They don't. If you look at the capital accounts, Fred, the Fed's charts, the domestic. That extra, well, the extra deposits, they just don't exist. That's why I'm trying to think of where does capital come from to create the concentration that we're all hoping to see in what assets, and that's forces us to think about what are they thinking? What are people thinking that have capital? Who is going to be the actor, the marginal actor that starts a particular narrative's motion and directionality. Is casino big? Sure. Massive. Is it structured products and more institutional? They're not necessarily going to be playing on the L2s. They're not going to be deploying hundreds of millions and billions of dollars on the L2s if you're BlackRock. But BlackRock will sure deploy $1 billion on Ethereum mainnet, especially if they spin up $5 billion worth of Ethereum staking and they're contributing significantly to the security of the network. Frankly, BlackRock will just buy Arbitrum, just buy every single Arbitrum token, and then maybe they'll start to engage on the roll up. So that's the type of capital that I like to think in terms of where $1 billion is couch change. In fact, to such a degree, it's such couch change. JPM, they just build their own. They're like, we don't have to play on these public networks, and they build their own networks. So where does the capital come from? I find quite fascinating. I don't think we have the same setup for casino and that degree of speculative ferocity that we had in 2020. I'm not sure what the next catalyst is and what the strong narrative is going to be. I have a little bit of insight that it may be more of safety type positions, more comforting type of positions, LPing, banking, lending. I mean, look, if you have integration with a large enough of a Web 2 app, like a ledger integration, or a bank picks up, wants exposure to crypto for whatever reason, contrary to what regulators want right now. But you can see a large influx into stuff like Yearn, which goes into Curve and Aave and relative safe positions. And there's 100 mil that flows in, or even a bill that flows in. And then, so where does the capital come from is almost more, that's the edge to where it may actually go. It's not clear right now. Still early. It's going to be really interesting if we see a significant move down in the DXY. Why? Because that means there's a tremendous amount of international capital. They're not necessarily thinking like we are. Different populations have different interests. For instance, if India all of a sudden changed its regulatory stance, they're going to Polygon. That's a whole narrative in India. That's such a strong brand and such a motivational phenomena, being that it was created by Indian natives. That's just such a wonderful narrative for the entire Indian population, with the tech sector and how much engineering could go into building on Polygon. That's definitely a strong narrative. And Cosmos hubs out in the east, with IrisNet directly integrated into the BSN, there could be definitely some interesting things with Hong Kong and with the BSN. The BSN is basically the U.S. Department of Blockchain Technology, but for China. That's what the BSN is. You can look them up on Twitter. They've been around since 2014. It's the Chinese National Department of Blockchain Technology. It's quite fascinating. And that's all Cosmos, but they have Ethereum mainnet integration. They have Polkadot integration. So that's definitely two narratives that are still in play. What plays out with Britain? I mean, Britain, they're on the defensive from a currency perspective, and they're probably going to do something heavy, favorable, positive from a cryptocurrency regulatory standpoint. If you have institutional regulation and guidelines, and from a British perspective, it's going to have that kind of flavor. It's not necessarily what we saw in 2020. What 2020 was purely U.S. flavor. That's where all the capital came from. It's going to rhyme. History rhymes. And the repeat is that we will see the exuberance. The rhyme is that it's not necessarily going to be the same bouillon cube. Maybe it'll be chicken bouillon instead of beef bouillon this time around. Different cultures has a great opportunity to take a front seat in the exuberance next time around.
No, I know you've been mentioning IrisNet a lot. How many users are there at the current moment with IrisNet? Because I feel like with the Cosmos Hub, it's like the same users that have been there for 2 years.
Yes.
Just rotating.
Yeah, there's no market, meaning there's still no seamless liquidity cross-chain into the Cosmos hubs. If you look on Kava, there's a fair amount of liquidity, $130-something million worth of stable coins. But the DeFi infrastructure isn't as robust as it is on the Ethereum mainnet and L2s and Alt L1s, Phantom, Avalanche, Solana. Not really an EVM, but the point stands. So in that regard, I don't see like imminent opportunity. I've had IrisNet passive for a couple of years at this point, Cosmos passive. Is from we tend to think from a DeFi standpoint, what kind of trading could I do? I mean, what are you going to go on osmosis and trade with relatively thin liquidity when you have Arbitrum that's got ridiculous liquidity on Trader Joe and $50-75 million daily volume? Or if you go into mainnet and bam, you got, hundreds of millions of dollars worth of liquidity on just Uniswap alone. So it's not even really considerable in that regard. Albeit the speculative projects are always considerable. That's not my forte. I like that you mentioned Polka Starter. We were talking about that earlier. That's old school. Back in the day in 2020, how many Polkadot projects were launched as ERC20s? And they never did anything other than be an ERC20. I don't know where Polkadot's going to land, but it is integrated into the BSN also. What is it? Astar Network is an EVM.
Yeah, they're like one of the biggest. They're like one of the biggest blockchains in Japan in activity.
Look at that.
I know about Astar. Yeah.
Isn't that fascinating?
It's pretty wild.
So look, that's
it's also pretty good.
That's what it's all about. Like, look, we're not into that, but they are, and that's meaningful. So we really don't know where it's going to be in the next couple of years, but that's a perfect example of something that's only marginally considered. Look, you just identified some heavy activity in Japan. What the hell is going on in Hong Kong? That could be crazy. And what the hell is cooking with the BSN? I don't know. All I know is capital flows from underperformance to outperformance. If a market is in decline, the capital is going to go to another market where there's opportunity. That's exactly what happened with Arbitrum with the ARB airdrop. Capital flowed in. It was like $1.6, $1.7 billion worth of liquidity in Arbitrum. Bam, we're up to 2.1, 2.2, half a billion dollars worth of capital flowed in. And now you got the large actors taking capital out. It's really just it's a predatory environment. I think that's going to persist for quite some time. Even if you see the majors outperform, Bitcoin and Ethereum outperform, still a negative sum game. If you're able to catch your trades and just remember to capitalize, take the capital back to security, and keep those position sizes rational, and this is definitely a great environment to capitalize. But I don't think we're primed for those, 2020, 100x, 1000x, and if you could get them, well, all the power to you, of course. I think they're going to be fewer and farther between. They'll be there because there's plenty of capital on this planet, but the structure of capital has changed. Just as we were talking earlier, it's just the amount of currency has been deflating. M2 is down year over year for the first time in history, but the DXY, that's what catches my fancy. That's contrary to all this recession stuff. From an international standpoint, you can have a giant recession in the U.S. and DXY goes down to 80, and you're going to see some crazy shit happen in crypto markets. And it's not going to be capital from the U.S. We're going to be going mad in the U.S. because everyone's screaming recession. It's going to get politically insane. But you'll have massive capital inflow from other countries. This is not a U.S. market.
I've appreciated, the few times that we've spoken on Spaces, but one thing that I failed on my part to ask you, and excuse me for this, but what got you into cryptocurrency? How was that like, and how long did it take you to realize, like, okay, I have a niche for X, Y, and Z?
Well, I don't have a clear answer. I started with Digibyte. Go figure. Great UTXO. Yeah. Great UTXO technology.
Right?
I'm sorry?
Or am I wrong on that? Was that Dan Larimer's project, or do I have it confused? Digibyte.
Oh, different. The Digibyte's UTXO blockchain. It's just like Litecoin, fork of a fork of Bitcoin.
Oh, okay. I'm sorry.
Old school. Yeah, I'm from like 14, 15, 16. Different times, but when everything changed with DeFi, just like everyone here, I was scrambling in 2020. I was like, what the fuck? I'm just buying everything, and everything's going 10x on the money. I'm losing 50% here. I'm making 500% there, and nobody knew what the hell, what was in profit, what was at a loss. Everyone was trying to make sense of what the hell was going on. I actually found macro after crypto. And then from macro, I found all the boys from like Real Vision and Luke Groman and Lynn Alden and Brent Johnson, Raoul Powell, and they really helped me understand money. When you understand money, you get such a fascinating perspective on what the hell all of this is. That's why I try and tell my community so much. If you figure out how to make money on Friday. And then Friday, you put money in a debit card, and then the debit card you could spend. And it's not just about making money. You have to factor making money into actually spending it. And that ultimately is an enterprise. It's a business. So it's how to have structure to how you engage with the markets, how to have a plan. And that's like, have a trading plan. And I'm going to enter at this price and I'm going to exit at that price. If it doesn't get to this price, I sell for a loss and then I try it again. And then to be rigorous with how you execute in these markets. And you can't deviate. You can't deviate from from what you're good at. If you try and do something you're not good at, it doesn't work. And I've learned that lesson the hard way so many times. And I can't hold spot positions. I just can't. For me to hold an Ethereum position, I literally had to put it on a ledger and bury it. That's the only way I could hold.
I feel that, dude. I feel that so much. It's so tough to not, especially with all the stuff on chain. Like, it's gonna really hurt in a couple of years going back on Etherscan and like seeing the bullshit that I minted for like 0.02 when ETH is like fucking 12K. That's gonna be absolutely brutal. Or the stuff I spent like multiple ETH on that's like down so bad from like NFT world and shit.
When you start to see your gas expenditure up at like $200,000-$300,000, it's just like it's a whole nother level.
That was stupid. Like I can't believe that like we just kind of like accepted that was what was okay last bull run. Like it was funny though because it kind of had an effect on chain with like Uniswap where it was so expensive to swap in and out that like everything ran so hard because like you literally if you were putting in like let's say $2,000, right? It's probably $400 for a swap like round trip. So just to enter the position, you're already down like fucking 30%, and so it's like one of those things where I just think it's so funny that whole thing happened, but it ended up being pretty lucrative and kind of like actually good for shit on chain. But
it teaches you position size.
What's up?
It teaches you position size. You can't take a position size if entering the position with slippage is a 30% loss, and that restricts opportunity. And it's so much harder with a smaller portfolio, and that just highlights just time and time again that it's so much easier to make money when you have a large stack to throw around. It's quite scary. And really, that's why I was talking about, like, if you can move 500 grand or a mil over to Arbitrum, it's such a playground, because you can literally just trigger breakouts. Once you trigger a breakout, it's just a cascade of smaller thousand smaller transactions just flood in. Then you're just capturing transaction fees in an LP. You're able to run it up 100, 200%, and then you're out with 50% of the market cap. It's really wild.
Yeah, it's nuts, dude. I think that I think people don't just have no idea, like what this era is, and I think in like 5 years we're gonna look back extremely fondly on just like how insane this whole like early growth stage was for everything, because I mean like we're just gonna look back and be like, damn, like there was a time where you could just like buy any trending coin on chain and like probably bang out like a 25x, like
Yep.
no big,
I mean, you catch a breakout in 2020. Oh my God. I mean, just technicals. That was such an important thing. Just ascending triangles. Just look for the picture of a triangle. That's what you can tell, like, anyone even trying to get into it. And if it breaks to the upside, especially with some sort of impulse, a little bit of breath to the upside, it's going to run. And that 2020 was certainly fascinating, just technically.
Yeah. Also, like, I think the fact that Alameda like blew up.
Oh my God.
So good for TA and stuff. Like, this market this year has just been laughably easy to trade if you're a TA trader, in my opinion, because it's like almost everything is just like very textbook. Accumulation ranges or like breakouts and stuff, and it's just like, dude, if you just literally like aped resistance at every point this year, like, you made so much money. And I think bears have to look back and like change their thesis when you look at like a multi-month move like the one that's occurred, and when buying dips like continuously works for like months and months, that probably says something, it's probably an indication that there's actually a bid.
But didn't work in 22.
What many people think.
22, you don't buy the dips. Yeah, but technicals work wonderful. So technicals are an absolute requirement for the smaller portfolio. Charlie Munger said it. You do anything and everything you can to get to the first 100K. You drive 10 miles less. You take a bike one day a week. You literally do everything. You claw through, horrible terrain. You do what you have to do, because once you have working capital, then you have such a different set of opportunities. I mean, there's so many positions I don't have enough size in certain positions that I can't capitalize. And I'm like, God damn it. If I only played end of 20, September, October, November of 21, just a little bit better, I could have the working capital I need to do certain things. LPs, man, if you could dominate an LP with like 60, 70, 80%, that's a whole nother level of opportunity. Because you just capture all the volume, and there's no liquidity to sell into. You own the liquidity, and then it's just a fascinating perspective. The most important thing with markets is to understand the psychology of the peer, understand the psychology of the predator, especially. If you have size, there's someone that has 10, 20, 30 times the size of you. How are they engaging with the markets? And you can't engage like that, but that's how you swim with the shark. And that's how you're able to capture the opportunity that the larger actor is presenting. That's the breakout that we always talk about. Who causes the breakout? It's not most often a group of 100 people throwing around $100. It's most often one actor throwing around 100 chip or $500,000, and they just boom, it pumps right through resistance. Why? Why are they going to push it right through resistance? That draws in all the capital. Why? Because everyone's looking at the damn technicals, and it just broke out. And there goes the rip to the upside. They got their position. It goes 100, 200%. Boom. They just captured 100, 200% on their $200,000 position in 2 hours. The rules of the game change when you have when you're able to swing around a certain amount of size. But then again, you always have a whale. If you're throwing around 200 grand, there's someone throwing around 2 mil. And so you always, even the predators have to watch out for the predators. It's always think in terms of predator and prey, and you're able to cover your bases.
Well, I think now is a good time before we wrap up. If anyone wants to come up and join the conversation or ask any questions, now's your time to do so. And if you guys are enjoying this conversation, it would mean the world to me if you could please follow the profile to my left, that giant yellow rectangle, Because Bitcoin, and turn on bell notifications. It would mean the world to me and to the brand as a whole. I want to thank all the listeners and the speakers. So if you want to come up, ask questions, or join the conversation, now's your time to do so. My name's Wabi. I host these spaces throughout the week and all that stuff. And we just talk crypto. And sometimes we have special guests on. Could be devs from protocols, founders, VCs, you name it. You'll see it here. And yeah, next week we have 2 special guests, and one of them is going to be Ben Cowan. I'm not going to mention what day it is. Yeah, we're going to have Ben Cowan next week, and we're also going to have somebody from 3AC. I'm not going to mention who it is, but somebody from 3 Arrows Capital, and somebody else on that space. So tune into that. It's gonna be huge, man. And we're just getting started over here. We're just getting started slowly but surely. And sometimes we host these price action based spaces as well. And sometimes I'll do like 2 spaces in one day. Like today, we hosted Gains Network. They're a product building on Arbitrum, and they have something called G Trade, where you're able to trade commodities and stocks and things of that nature, as well as they have some NFT perps now, and they have one of the highest like TVL contributions to Arbitrum, and always giving updates. And they're partnered with the best of the best in the crypto ecosystem. And I see we have one guy. His name is P Ford. I'm gonna bring him up.
Hey, Noah, really enjoy your, I catch your show on YouTube every now and then. I just wanted to ask about your thoughts on this real world asset narrative, and whether or not you think that has any juice, and or if it's just kind of an unreasonable idea.
That's a big deal. Generally, you can think of it in terms of collateral. Collateral is collateral, and collateral, you're able to access equity, and you're able to create synthetic currency units, basically liabilities. That's currency creation. So if collateral comes into the crypto markets, it has the likelihood of increasing overall liquidity conditions. More liquidity conditions means there's more currency units that you're able to acquire, which puts pressure on the market to be more so a positive sum game instead of the negative sum game that we're still experiencing. It's been like that since end of 21, January of 22, and it persists until today. Basically, at this point, that's the first thing to look for to start seeing signs where you have increasingly favorable conditions, where you could more easily get into a breakout zone. is when the liquidity starts to increase, and whether that's collateral liquidity, which is valuations, like if you saw more Bitcoins move on to mainnet, but the real world assets that you're thinking of, that is a big narrative. Early, whether they're from an investment perspective, to make any considerations in that regard, but definitely from a conceptual standpoint, I think it's a big potential part of the future.
Cool. If anyone else wants to come up, we'll have this up for a few more minutes. Zcash, what's going on, brother? Go ahead, man.
Oh, that was nothing. That was just some background noise. But yeah, it's been pretty good. I've just been chilling and listening most of the time. But yeah, what I said earlier, that's just kind of my final thoughts to wrap up. I don't think we're seeing all-time highs anytime soon. Pretty much just something similar to 2019. I could be wrong. I have friends that believe in the $1 million BTC thesis, but I don't think so.
You would need supply disruption. You would need the majority of inflation. You can't. The dollar can't print to hyperinflation. The amount of dollars that are needed every year just to pay the global debt load, it's not mathematically reasonable. They'd have to print $100 trillion, but you can't just print it. Where does it go? Who distributes it?
One place it goes is crypto. I actually think that I've tweeted about this a lot before, that Bitcoin is like a store of inflation, not a hedge against it. So people get those kind of cycles mixed up. That's not what it does. It stores inflation. It takes dollars outside of the real economy and pumps basically an asset that's designed to go up and to the right. But obviously there are contraction periods.
Decent statement. Response to liquidity, we see significant correlation with the Fed balance sheet, 90-something%, as Raul talks about. So definitely see that. Complexity, though, because we're in net disinflationary territory from a global currency standpoint since 2008. Derivatives never recouped. There's only, $600 trillion worth of derivatives notional outstanding, according to the BIS, which is quite a deflated state as compared to 2008 highs. Just, history repeats, it doesn't rhyme. And folks like Lynn, they're constantly talking about the 40s compared to the 70s, trying to digest the current consumer price inflationary state of the system. And I agree with her, more so the 40s as compared to the 70s. It's not a lending-driven consumer price inflation situation. This is supply disruption, which they can't print. They can't fill the SPR by printing oil. That's definitely why Luke Groman is a great take on where things are. Have you seen tax receipts or at least outlays for 2023? We've spent something like 30% more in Q1 as compared to 2022. We're so far above budget from a United States perspective. It's quite extraordinary. And literally, when Yellen says if they don't increase the debt ceiling, some shit's getting close. Like that's why, that's such an important thing to consider. I look at the technical charts and I'm like, they look good, but the debt ceiling is blocked and we are spending way more money than we have. What happens? And that's coming up really soon. It's like right around the corner. It's like June, Treasury's broke. And how do they increase the revenue? They sell bonds and they refill the TGA. What happens when they sell bonds? Who buys the bonds? If the U.S. domestic buys the bonds, there goes cash from the U.S. domestic circulation. Cash goes to Treasury and it refills the TGA. It'd be basically deflating the available currency in circulation. And that looks to be the case. The marginal buyer is U.S. domestic. It's not necessarily international anymore, as Luke Groban talks about. So the next couple months are going to be crazy. Heading into summer, June, July, we're going to know. We're going to know some serious shit about what's going to play out for the rest of the year. Anyway, I digress into macro. All right. No, always
Well,
happy.
I think that about wraps it up, man. We've been
Yeah,
going for
sorry.
about
I was trying to I was trying to unmute so I could reply to you. But the last thing I'll say too, I think people get caught up. Like I think the macro, there's obviously a lot of signal to be derived from, and like it's important, of course. But at the same time, I think that if you paid, like if that was like the epicenter of your thesis and you became
All right,
so
guys, I
enamored.
am out. Thank you,
Okay.
Wabi. You guys all have a good night. It was good
Take care,
talking to you.
man.
Thanks, dude.
Thanks for coming up.
Yep. Peace.
But yeah, all I was saying is the people who overlooked or who looked too much at macro actually just did terrible.
Sure.
You know, since November, and it's like some of the best traders I know are like people that aren't on CT and they're actually just like literally just look at the chart and buy, right? Like they don't know like why why any of the price action is occurring. They're just like, oh, I saw BTC at like 17K, so I bought it. You know, like those are like they have no idea. Like they kind of know about FTX or like whatever, but they don't really like. They're just like, oh, it looks cheap, so I bought some, and that's it. And they have outperformed like a lot of the macro experts. So
True.
that's just the last tidbit I'll end with to a certain extent, because I mean, as things get increasingly worse, I think there's also a case to be made that like market participants will become increasingly desperate. And
Yes.
kind of goes back to the
well said.
goes back to like the casino thesis. Like,
okay,
dude, I mean, as someone that's 23, I think that there are many people in my generation and people roughly around my age, and they, you know, this is the ticket. Like they saw this, or they might have bought something a couple years ago and made some insane gains, and they stuck around, you know, and they realized like, oh shit, like I said this yesterday, but I would think it's worth saying again, is that like these people is like, oh wow, I'm not going to be able to own property. I'm not going to be able to, you know, like own my vehicles. I'm not going to be able to own like anything. And I'm going to just be priced out of like enjoying life if I don't ape these shit coins. So like, fuck it. I'm just going to, you know, go like all in on this trending shit coin. And I think that there will be a huge amount of people that are, you know, like a lot of them will make it just from like sticking around, but also, I mean, that's going to be so much liquidity injected. That's just like straight up desperate capital from retail. And I think that like, that's inevitable. I mean,
yes,
like there were so many people last cycle who were like, oh my God, if Doge hits $100, I'm going to get the, you know, like I'm going to be so fucking rich. I'm finally going to get out of like poverty and shit. And, you know, like that whole sentiment is just like, dude, people like the market has been so gamified over the last 3 years. I don't think that fundamentals are as significant as they were. And that's just like, I think that's truly the new reality in the sense of like that's bled over to equities, right? Like, you know, we like obviously Tesla isn't worth what it's worth, but at the same time it's trading at that absurd market cap because, you know, there's like just it's kind of a meme, and then like Elon's kind of a meme and people just believe in him. So it's like if you try to apply rationale to that evaluation, then you probably got blown out shorting it like in 2021, you know, like it's like, you know, if you're literally looking at their books and you're like, oh, they only make, if you're playing anything you know about like investing previously, you probably got fucked, because there was no reason it should have ran as hard as it did. And I mean, that was evident too with obviously the whole GME thing. Like, you know, of course it's a shit stock that's not making any money, but like, you know, people just pumped the fuck out of it just cause. And I mean, I've only like been investing since like 2018, but I can't imagine that was like, I can't imagine there was too many absurd incidents like that in equities outside of like the tech bubble, you know?
Yep.
And so,
Because it concentrates.
I just think that there comes a point where like people just realize that everything is getting more expensive, and just access to investing is so much more accessible than it was like even three or 5 years ago. Like, you know, now you have everyday people who can just download an app and bid, and you know that hasn't been the case for like basically forever.
Yeah.
Like, I think that's a very understated aspect, because I think a lot of people also got wrecked looking at historical price action. That's the last thing I'll end off with, including me in 2021. I was very adamant. Like, I didn't sell all my bags in December 2021 because I was very stuck on the 2018 and 2017 price action, right? And so in 2017, 2018, like the meat of the bull run, like the most of that insane move happened in the last 3 weeks of it, right? So
Yep.
like, you know, like BTC 2x, like from like, and then everything just like went absolutely parabolic. And so I was even though I was up a lot, I was stuck in this mindset of like, oh, well, this happened in the past, so surely like it's going to happen again, you know, like no matter what, we're going to get this insane blow off top in January. And it turns out that the blow off top was 69K. So, I mean, I still did great, but I was just like, man, this sucks. Like I really fucked up. And I think that people made the same mistake last year looking at like the fucking 2008 fractal and shit on SPX, like that, you know, all that stuff. Like, I just think that it's never like one of the best, like one of my mentors in investing told me too. He said, no one's ever made it like betting on the end of the world. And even though like you might be bearish on different things that are happening within just the world in general, like for the most part, these things work themselves out, you know? So I think that people just like got way too heavy on the doom porn, and they still are. And like, yeah, like we're probably going to, you know, inflation is probably going to hurt the lower class, and it's probably going to affect a lot of people, and who knows? But I think that it just pays to be an optimist, and you rarely hear of stories of people who, you know, like were just extremely bearish and ended up just like basically making it from like being bearish on everything in general. Because I mean, people kind of forgot like the reason that people buy these is because they're just programmed to go up forever. It's like, dude, that's the whole fucking thing. People just lose sight of like why they're in the game, I feel like, and just get very caught up in all the short-term.
Couple of conclusory thoughts before my brain collapses. You're right about the casino. You're right about conditions getting really bad domestically, but also internationally. So you will have that exuberance, and crypto will express that exuberance far more than equity markets will. The question that folks need to ask themselves is, sure, you can engage, you know, left curve and just slam it down. But what if you could not mid curve it, but you can right curve it and have at least not shoot for a 10,000x, but you shoot for the 10x, or you shoot for something like value investing, where you don't want the multiples, but you want the volume and the transaction fees and the ownership of piece of the infrastructure that's able to capture that insane volatility that manifests from the exuberance. And that's just something I try to encourage so many folks as a sustainable way to engage with the market, to try and make less rather than more. because there's a tremendous amount of opportunity to owning a piece of the transaction fees as the exuberance grows over the coming 5, 10, 15, 20 years. The exuberance will return. This is a critical juncture, but liquidity has been drained. The younger generations are relatively tapped out. And that's just raw data straight from the Fed. But as you said, they will deploy, especially if something's going parabolic. And my perspective would be I don't necessarily want the 1000x. I'd rather get 100% on the money and capture transaction fees from all the activity of $100 million that flow across the markets. And we talked about ways to do that as AMMs and the AMMs share their transaction fees with their participants, depending on the AMM. Talked about a couple of names, but just don't go too far down. You don't have to go into too much degen to significantly outperform in crypto markets. And as you restrain yourself, you could actually start to see over time, it's not just about degen, it's about, this infrastructure that's allowing people to engage in these relatively degenerate activities, and you're able to capitalize on that for better or for worse. There's no good or bad in capitalizing on irrational transaction activity. That's just, capitalizing. That's capitalism.
It's also, the one thing that made me think of is like, it's a lot easier to catch a 3x 3 times than a 30x.
Yeah.
Like, I think people forget about that too. Like, just compounding is a very understated investing method, I guess. Like, obviously people do it all the time, but I think that it's a lot of people are just shooting like, what's the next 100x, what's the next 50x. It's like, dude, just take, like, if you have like $5,000 in your name or something, like you catch a 3x 3 times, like you're chilling. As far as like, that's a lot easier to do than just sitting there and trying to hold out for a 30x, because there's a lot of psychology that gets fucked with that too. Like when you're up like 15x, and it could keep going, but you also know that you should probably take profit, and so you end up selling way too early.
With the 30x, if you get a $1 million asset market cap going 30x, somebody put in $500,000. Somebody put in $1 million. And that person's turning $1 million into $5 million when someone's trying to turn $1,000, and they're never going to get the $30,000. So that's why it's so important to start to digest the predatorial nature of the markets, because you can capture that move, but you got to get out before the big player does. And you got to inspect Uniswap info if you're playing on Uniswap, and you got to see the transactions that are going. A deck screener is great in that regard. You can see the holders of LP positions and who's getting in and getting out with what size. The more information you have, the better you can navigate these markets, and definitely need to know who you're playing against. Trading is, by definition, a predatorial or a predator-prey activity. All right, guys. Good stuff.
Yeah.
Thanks,
No problem,
Wabi.
man. It was no problem, man. We'll be back.
Yeah, great chat.
No problem, man. Yeah, we've been running for almost 3 hours now, but yeah, I'm gonna go train right now, man. So everyone, take care. Feel free to follow us here, because Bitcoin would mean the world to us, and feel free to follow all of our speakers. I'll be back tomorrow at 5:30 p.m. Eastern time. We're gonna be hosting some of the Elrond people. We're gonna be hosting Elrond Mafia and the largest NFT platform, XOX NFT, and 2 other protocols building on Elrond. And then Friday, we have, as I said, Eigenlayer. It's going to be our pin tweet at Because Bitcoin shortly after the space. So be sure to subscribe to that when we do post it on our pin tweet. So peace out, everyone. Take care. God bless you. And thank you all so much, man. Take care.
Thanks, guys. Good night.